5 seconds to the open.
Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to this week's edition of Follow the Money Weekly Radio. So glad that you're joining us all around the world. As always, you can find us online at followthemoney.com. Right there, you'll find all kinds of free videos, podcast articles that we've done over the years to help people just like you break free financially, learn how to trade the financial markets, learn how to invest in foreign currencies, learn how to invest in precious metals. All kinds of information right there on our website waiting for you at followthemoney.com. Now listen, guys, we have a great show today. We're going to be talking about two vital keys to trading success. Two vital keys to trading success. I know that not everyone in the audience today may view themselves as a trader. Some of you may say, well, I have a 401k or I have a IRA or whatever the case might be, but I don't really consider myself a trader. And that's completely fine because what I'm going to say today really applies across the board when it comes to investing, I would say. But I want to say this, that in this current environment, we have received many emails over the last several weeks and months as many people now are starting to thaw on the idea of the stock market now that President Trump has made many promises for tax relief and also deregulation. This whole agenda is driving the price of stocks higher, not just here in the United States, but also in many other countries as well. And it's not just the stock markets that are seeing an increase. We're also seeing some great volatility and an actual uptrend forming in many different commodities, indicating that long-term downtrend that began back in 2011 may finally be coming to an end. So there is a lot of opportunity now. And so if you do have a little bit of money that's on the side, I'm not talking about rent money. I'm not talking about the money you need to get by, but I'm talking about that extra capital, that trading capital. For those of you who follow our 5 levels of financial freedom, those of you in level 5, right? Those of you who have that excess capital and you say, you know what? I see a lot of things going on and I'd like to put my money in and make a little bit of money from all of this madness that's going on. And certainly there is a lot of madness, but here's the problem. Most traders fail to consistently earn money in the markets. And I'm going to share with you the 2 reasons why I believe this to be the case. In fact, many studies show that nearly 95% of traders fail to earn consistent profits. Why is that? Why can't individuals go out to the stock market and consistently earn profits from their trading? What causes so many traders to fail in making money from the financial markets? Well, I have a unique vantage point to answer that question because I have literally tutored and coached and mentored many different traders around the world over the last several years. And so I have seen personally many traders rise and fall due to 2 very simple but extremely important reasons that I'm going to share with you today. These reasons are not simply, by the way, just my opinion, even though I do have a unique vantage point here. They are derived from many years of my own coaching and from the expertise of others. So I know from the time that I've spent coaching individuals on the basics of making money in the stock market, 2 important keys that can help you in your trading success, help you to earn consistent profits in the market. So let's go through these very briefly. The first key that most people need to understand that is vital to trading success is that you must develop a winning mindset. You've probably heard that psychology is very important to success in trading. However, I would suggest to you that psychology is not only important, but that it's crucial if your goal is to carve out consistent profits from the market. Now, nearly every successful trader that I know approaches trading like an athlete approaches his sport. They engage in training, they put their game face on, and they keep their minds focused on the task at hand. And I would say, just like anything in life that's worth achieving, success in trading begins with a right mindset, with a winning mindset. Jack Swagger put it this way. He said, "The truth is that trading, both successful and unsuccessful, is more about psychology than tactics." That's very, very true. A popular trading expert, Dr. Van Tharp, breaks down the process of trading into three primary categories. These include trading strategy, which makes up about 10% of your success, money management, which makes up 30% of your success, and psychology, which makes up about 60% of a trader's success rate. But what do we mean when we say trading psychology? Isn't that just a bunch of mumbo jumbo? Somebody might say, well, that sounds like psychobabble, and I don't really have time for that. Well, never underestimate the power of psychology in trading. After many years of my own trading, I can certainly testify and personally testify to the absolute importance of maintaining a right and proper and positive attitude, especially in a dangerous market, in a difficult market. As a trader, you will inevitably experience a string of losses, which can not only reduce your trading capital, but can also devastate your confidence. So while keeping a winning attitude in spite of trading losses is vital, so too is maintaining a humble attitude amid a string of stock gains. One of the most important concepts that guides my own life is simply this, that you are never as good as you may think, and you're never as bad as you may think, right? You're never as good as people say, and you're never as bad as people say. Some traders become their own worst enemy after losing big in the markets, and so too, some traders become far too confident after enjoying a string of winning trades. So, successful traders know the importance of maintaining a healthy and positive mental attitude, and they've learned to control negative thoughts and emotions that can destroy their trading confidence, because mental negativity and successful trading simply do not mix. And it seems that whenever there are wins in the market, whenever you have a victory or you have a big gain as a trader, those typically seem to be okay with you, right? But it's usually, and almost always, in fact, I should say, the losses that really grind upon the trader's psyche. While it may be difficult at first, I encourage you to view your trading losses as simply the cost of doing business. It really is. If you're going to be trading, you're going to lose money. So you need to be let in on that little secret. All traders lose money. Even the most brilliant trader out there, even the richest traders, even the ones who are most successful, they still lose money on a regular basis, and they understand that that's the cost of doing business in the stock market. It doesn't matter how much knowledge someone has or experience someone has, an intellect that a successful trader possesses, he will still lose money occasionally on a trade. Again, this is just part of the trading business. So the goal is to simply let your gains exceed your losses, right? Sounds simple enough, doesn't it? When one of your trades goes wrong and you lose money, don't beat yourself up. Instead, review the trade to discover where your strategy went wrong. Likewise, when you have a really big gain, when you enjoy a big victory in the market, don't get overconfident. Instead, review that trade and see why your strategy worked and attempt to repeat that process over and over. Just as Olympic athletes know the power of controlling their thoughts, likewise, successful day traders and swing traders and position traders believe in their abilities. They know that they will succeed, and they expect success. There's an old saying that says, what the mind harbors, the body manifests. Simply put, your mental attitude and thought life, whether you realize it or not, greatly dictates your future altitude and the direction of your life. Smart traders know that to achieve long-term success, they must learn from both their successes and their mistakes. So it's important to stay optimistic and to remain humble. Don't let emotional extremes sideline you on the way to trading success. In my own coaching and education with the Follow the Money trading community, I stress over and over to our folks the importance of two mental characteristics that successful traders possess. At the root of trader psychology lie two vital characteristics. What are they? Number one, a disciplined mind. A disciplined mind. And number two, a spirit of patience. Now, for those of us who live in the modern West, right, in the West today, in the United States and in Western Europe, the modern Western mind is wildly undisciplined. So in times past, those who lacked discipline soon lacked food, right? So if you lived in a time where there wasn't a convenience store down the road or a grocery store down the road or a myriad of other services available to you, you were kind of in a bad spot, right? If you were lazy. So in times past, if you lacked discipline, you wouldn't have anything to eat. Without a persistent diligence, ancient life was virtually impossible. Today, not so much. Modern men traffic in sweatless occupational absurdities, which affords a level of daily sustenance that would be envied by the wealthiest kings of old. But fortunately, in our modern, fast-paced, and highly convenient microwave generation, a lack of discipline is not necessarily a death sentence, as it was in times past. So a disciplined mind, although very difficult to achieve in the West, is, I believe, at the core of what you need in your mind mentally for trading success. Secondly, patience. I mentioned a spirit of patience. Patience also has never been a rarer commodity. It should come as no surprise that this modern day discipline deficiency is accompanied by a shortage of resolve, which is most clearly seen in the form of impatience. The great investor Warren Buffett said that the majority of his money made over the years has come from investor impatience. Isn't that an interesting statement? So the lack of discipline and the lack of patience, these two very key psychological characteristics. Note the irony that every trader must possess to achieve long-term trading success. They're in short supply in this generation. So these are two things that certainly you will want to understand and take on as you grow in your trading and you seek consistent profits from the market. Certainly discipline and patience become two very vital things for you to possess psychologically. Okay, so the first key to successful trading is to develop a winning mindset. And there is a lot that goes into that, of course. And we have spent much time on that with our trading community. If you're interested in more about that, you can always go onto our website and learn more about trading psychology. Now, that's the first key. The second key to trading success is to use a system consistently. Every year, many would-be traders come to the stock market with dollar signs in their eyes, eager to make money. And even if they have a mind of steel, and even if they have a stomach of iron to match, they will still fail if they don't apply consistent rules in their trading. Without a rules-based system, a trader will be forced to make up his own rules as he goes, which will often cause him to violate his own common sense. Such traders should not expect profits, but instead can expect to suffer massive losses. When a wise trader enters a stock, it is not because he wants the stock to go up or because he thinks that the stock should go up, but because the stock has satisfied his own entry requirements. If you are a trader, how about you? What rules do you use when entering and exiting a stock? And aside from entry and exit rules, what rules do you apply when considering how much of your trading capital to place into a particular stock? From many years of trading coaching, I can tell you that wise traders are very picky traders. They know that they have thousands of stocks to choose from, not just here in the United States, but across the world. And they also know that they have commodities and currencies and many other types of asset classes that they could trade. They refuse to just settle and instead apply discipline and patience to identify and seize new buying opportunities. Over the years, I have distilled nearly 2 decades of trading experience into my own trading software and education system. We have that here at our website. If you go to our website, followthemoney.com/pro, it'll take you there. You can learn all about our system. But here's the thing. You don't have to use our system. You don't have to use my system. You can create your own system or use someone else's system. That's not really the point. The point is the main thing is that you need to use a system when entering and exiting the stock market. See, trading may look like a game, but it's not. When there's real money on the line, making up the rules as you go is a sure way to get slaughtered. If you're new to trading, you need to invest first in your education and develop a trading system that you feel comfortable with using consistently. The stock market is a far too dangerous place to spend your time learning how you should enter and exit and learning rules and learning psychology. Don't use real money to learn that, of course. You can always use things like paper trading. You can go to a website like optionshouse.com, and there you can find a free paper trading system which allows you to actually trade with money that's not real so that you can begin to get the idea of how the whole system works. So paper trading is a very powerful way for you to begin the process. But we're going to continue this conversation in next week's podcast. On next week's broadcast, I'm going to share some of my own trading rules with you, some of that rules-based system that I'm talking about. I want to share some of those rules with you to give you an idea of what that looks like. And again, if you're out there and you're new to trading or you're thinking about trying to take advantage of some of the big moves in this market, maybe you want to add a little more to your 401k, or maybe you want to beef up your IRA a little bit in 2017. Maybe you need to do that for retirement. Maybe you want to take a portion of your IRA and actually begin dabbling in trading. Before you do that, you need to invest in your own education. So I encourage you to check out our website, followthemoney.com/pro. And if you want a trading coach, you have found it. followthemoney.com/pro. Hey friends, Jerry Robinson here from Follow the Money. Are you ready to learn how to trade the financial markets? Or are you ready to take your current trading to the next level? I want to show you how to trade stocks, commodities, currencies, and options for consistent profits. If you're ready to learn, I'm ready to teach you. In fact, we have created a very powerful trading software and education system that provides you with entry and exit signals on every US-based ETF and stock. Our powerful system allows you to identify the current trend in any US-based ETF or stock with high probability entry and exit ideas. You can use our software on any device, and you'll also get access to ongoing live trading coaching videos. Whether you're a complete newbie to trading or whether you're an experienced trader, you'll love our live video coaching calls held every Tuesday and Friday morning during the live market hours. In addition to ongoing training through our videos, you'll also receive our best trading ideas every evening in our nightly trading report, in which you can log into our website and check out the latest uptrends and downtrends, along with many other high probability trading ideas generated by our system. A lot of people already know how to trade, but they just need a coach. They need someone to help them along. And if that's you, you have found, I believe, the right solution in our trading software and education system. Right now, we're running a very special offer for all new members. Become a pro trader today. Get access to all of our services for only $1. That's right, just $1. Go to followthemoney.com/pro and select our monthly plan and enter March Special into the coupon code section and get your very first month for only $1. Simply go to followthemoney.com followthemoney.com/pro, choose the monthly option, and be sure to enter the word March Special, all one word, no dashes, no spaces, and get your very first 30 days of our complete service for only $1. Try it now. Followthemoney.com/pro.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
This is Tom Cloud with this week's Precious Metals Market Update. In some ways, it's a lot like last week, but in some ways, it's not. And what we want to get to immediately is the calls that are pouring in here about interest rates going up with the Fed. The Federal Reserve meets next week, week after, and then they're going to raise rates with over an 80% probability, of which the markets, in my opinion, have already countered that into the market prices. But when they do that, you got to remember bonds are going to get hit. Bonds have been hit so hard since the Trump election back in November, and yet there's a piece of the pie that says, well, maybe bonds will rally because of what's going on with the elections in Europe. So let's take a quick look at that. Certainly, if interest rates continue to go up here 2, 3, or 4 times this year, as the Fed's talking about, bonds are going to be the worst possible place you can have any money. And you're going to see big drops and liquidity problems in bonds, as we see inflation has already doubled just on the last 3 months from what it's been for the last 3 years. We're seeing the annual rate doubling as everything out there is going up in price. So with all this money that's been created by Trump and Obama and Bush, we're starting to see all that kick in higher prices. Then you have the side of the market that says, oh no, bonds is where you want to move short term for safety as we watch the European Union fall apart. We have the first election, March 15th, in Netherlands. And Netherlands has said, the leading candidate has said, he's pro-Trump, he's pro-immigration of vetting in, people coming in, and he also wants to leave the European Union. Then the more interesting election is on April 23rd, when the 5 parties, 4 of them are run by a man, and Marine Le Pen, the female, who's second in almost every poll, because what happens there, as soon as the election's over, 10 days later, 2 weeks later, they have the runoff. And the top 2 of those 5 run. It's almost certain Le Pen, the female candidate and the pro-Trump candidate, will be in the runoff. But she's still behind when you look at her against one of the other guys in what they call the Conservative Party, which is not what you and I would call conservative. So this is very important, because if she were to win, and if she changed immigration policy, and if she withdrew from the European Union, then it would be a fast drop in the European economy. All of them would have to print up their printing presses, and gold and silver would go up. Bonds would even then go into a further decline after the initial drop of money moving to U.S. Treasuries on the very short term. So what I've told you is interest rates are going to go up, except for the short period where we could have a European Union catastrophe, and then interest rates would stay stable for a very short period to see if it was going to put the world into a recession. I know it gets complicated. I know it's not stuff you look at every day, but it's probably one of the most 45-day periods of importance in my whole 41-year career. So look at it and watch it. You're going to win with gold any way you go. Silver's the one that is going to explode and double or triple in a very short period of time if things fall out and money's printed by all these countries. But gold is going on, and we continue to hear the date March 22nd. March 22nd. It seems like there's something out there that we don't know that is going on behind the scenes in Europe, and there could be all kind of rumors on a very pro precious metals announcement on or before March 22nd. So stay tuned and put that on your calendar, because it really could be a day changer if some of the rumors are true, and there is going to be a new gold-backed currency this year, not 3 or 4 years down the road, as a lot of you have asked me about and read about. So all I can tell you is stay tuned almost daily. Watch the price of metals, watch the bond market and the stock market, because if the European Union collapses, the U.S. stock market will make a big drop for sure. So it's kind of a time of wait and see, be careful. You should be adding to your precious metals, a little bit at a time. During this time, cost averaging, because where the price is today after the drop of the past 3 days, the market, in my opinion, has now been discounted. And as I record this on Wednesday morning, March 8th, gold and silver are absolutely at still prices and should be added accordingly. Not all that you want to put in, but partial you should go in and put in. If any of you are interested in self-directed precious metals IRA, we can help you set that up, where you can actually own physical gold and silver through a custodian. We would function as your broker and your representative, and we would talk about what percentages you wanted in gold and silver. So call us on that. You can reach us at 800-247-2812. That's 800-247-2812. And if you're still holding rare coins, we feel you need to make a switch to bullion coins as quickly as possible, because if you look at the last 17 years of this gold bull market, gold bullion's gone from 256 to 1230, where it is 1220 something, where it is today 500%, where the rare coins have not even doubled over the 17-year period. Plus the companies that sell them put very large markups. If you want to buy rare coins, I'll sell them to you at 4% over my cost, and you'll be saving a tremendous amount if that's the way you feel you have to go. But the next few weeks are going to pick up in knowledge, but for now, slowly move in, watch the 2 elections in the Netherlands and France, and the possibility of the breakdown of the European Union. Until next week, this is Tom Cloud signing out.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, friends, and that brings us to the end of our program. Thank you so much for tuning in and allowing me into your life each and every week right here on this broadcast. And as always, I leave you with this final word, this time just a thought. The greatest sign of weakness in the American church is its division. America's capitalistic society transformed the relationship that people have with the church, and we have become spiritual consumers of choice, while the churches have become the annoying carnival barkers. Instead of occupying a seat of wisdom and temperance, the American church today often is viewed as an irrelevant voting bloc that hates gays and anyone who has had an abortion. But this is quite the opposite of the true church of the Lord Jesus Christ, which is known for several things. For its love and compassion for all of humanity, but especially the lost, the broken, and the least of these. It's known for its long-suffering patience with its friends and enemies alike. The true church of the Lord Jesus Christ is known for its demotion of its own self and the promotion of Christ alone. The true church of the Lord Jesus Christ is known for its zeal to see the house of the Lord restored to its former glory, for its amazing ability to turn the other cheek when struck by another, for its peace-making efforts despite strife, and for its dedication above all else to the Great Commission given by Christ during his ascension. The church's entanglement in politics and its influence over national wars has cost more lives than any other single partnership in human history. Those who long for the kingdom of God know that it will come when Christ's followers lay down their arms and pick up their cross. And that's just something to think about. Remember, friends, when you're ready for the truth, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.